Hi, my name is Colleen Shepard. I'm the Community Outreach Director here at Purdue Federal Credit Union. So my role here at the credit union is to focus on getting out into the community, working with non-for-profits and the different schools, helping their clients and their staff build a better financial future for themselves. This is my coworker.
I'm Molly Milseric. I'm here with Purdue Federal Credit Union as a community relations specialist, and what I do is work with youth and college students so that we can help build a great financial foundation. Over the years, we've noticed a change in habits where students are being introduced to checking accounts, savings options, and building credit at a younger age. So we know these next several months are critical. And thank you so much for joining us as we help today share helpful tips and Purdue Federal products that you could use to help your student build a solid financial foundation before they navigate a new stage in their life beyond graduation. In this video today, we will talk about understanding and building credit. So we're going to start with some true and false questions for you. Colleen, obtaining your free credit report will lower your credit score. Is that true or false?
Actually, Molly, that is false. Checking your own credit won't hurt your credit score. It's considered what we call a soft inquiry, which is any time that you obtain your own credit report and you're not applying for any type of loan, any type of application. Those are considered hard inquiries that could drop your score a little bit. Okay. Speaking of pulling your credit reports, it's very important that we pull our credit reports. You get a free credit report every year on all three bureaus. So it's important to look at all of those so you're seeing, is your information correct? Is there loans or accounts on there that are not yours? A lot of times people will have identity theft and they won't even know it until they go to apply for something and they find out at that time, which is not the best time to find out about that.
Sure.
So you can get your free credit reports from annualcreditreport.com, and we'll make sure that it's this website, because when you type that in, lots of different links will pull up and a majority of them can be fraudulent. So you want to make sure you're clicking on this exact link. Purdue Federal provides your FICO score and digital banking each quarter.
So, true or false, paying off the balances on your credit card each month positively affects your credit?
That is true, and it is also a very good habit to get into, right, with your credit cards. So paying off your credit balance every month keeps your credit card utilization ratio low, which we want to keep that in the 30% or lower, right? So we're paying that off every month. Also, you're not worrying about paying any interest. And then also, as far as paying it off every month, using your card every month, we're showing that activity, which is going to help them build their credit score.
Okay. So closing old accounts can help your credit score?
That is actually false. A lot of people think that when they have old cards, if they close them, they're not using them. That's the best way to go, which actually is not, because when we close those old accounts, we're closing that credit history. So say, for example, you had a credit card for 10 years and you decided to get a different one because the rewards were better, and you close the old card, you're going to lose 10 years of credit history, which is a big deal.
It is. That's a long time.
Absolutely.
So, true or false, your age, income, and gender have no effect on your credit score?
That is true. So a lot of people think that age and income have an effect on your credit score, because they assume, the older you are, the better your credit's going to be, or the more money you make, the better your credit's going to be, which is not the case. I work with people all the time who make lots of money, who don't have good credit, and people who don't make as much and have great credit. It's all about how we're spending our money and if we're being responsible.
Sure. And tell me, what are the factors that make up your credit score?
Yeah, so there's 5 factors, right, that create your FICO score. So the first and foremost, the most important aspect of your credit score is payment history. So that means paying your bills on time, right? So that's going to take up 35% of what creates your score. Next is going to be your debts owed, which is like we were talking about with the credit cards, the utilization ratios. So that's going to include that, where we want to keep those limits lower, in the 30% or lower. Length of credit history, we talked about that, closing old accounts, right? So we want to make sure we're obtaining long length of history with our trade lines. And then the two smaller categories are going to be new credit. So we talked again about the soft inquiries versus hard inquiries, and then credit types that we're using. So when we talk about that, they're wanting to see that you can handle installment debt and variable debt. So that's where if you have an auto loan, a mortgage, that's going to be your installment debt, fixed rate, fixed payment. Credit cards are going to be your variable debt. So now that Molly talked about the factors that go into creating the FICO score, I'm going to talk a little bit about the factors that create the Vantage score. Both of these scores use the same numeric scale, so 300 to 850. And the main difference between the two is that with the Vantage score, people can see a score start to produce within 1 to 2 months of opening a credit account, whereas the FICO requires 6 months of credit history. So the factors are payment history, timely payments, making sure our payments are on time, that's 41%. Depth of credit, so having a mix of your credit types like we talked about earlier, variable debt versus installment debt, that's 20%. Credit utilization, which we talked about, we want to keep that below 30% of our utilization ratio. That is 20% of the Vantage score. Recent credit is going to be your inquiries, soft and hard inquiries, when you're applying for new accounts. That's 11%. Balances, so that is going to be the balances on all of your credit accounts. So that's slightly different than the FICO. That's 6%. And available credit, which is different than the FICO as well, because it's taking into consideration your unused credit limits, which can be a positive effect on your Vantage score, and that is worth 2%. So basically, in summary, both the Vantage and the FICO serve the same purpose of assessing credit risk, but they have differences in credit history requirements and scoring methods. So lenders may use either score, so it's very important to make sure you're monitoring both and maintaining good credit practices.
Colleen, tell us why good credit is important.
Oh my gosh, Molly, so many reasons. So good credit is important for borrowing power, right? So you can get those loans at the lower interest rates, so we're not paying ridiculous interest rates to buy now, pay later, right? Credit card approvals are a must with good credit is a must with credit card approvals. When your students are going out to get that first apartment, they're pulling their credit for those leases. Employment opportunities, you find a dream job, they pull your credit. Insurance premiums is another big one, especially at this age, because when they pull your credit for that, if we have the lower scores, more on the low end, they're going to be paying a lot more per month for that insurance. Same with cell phones and utility companies.
Sure.
So really, we need credit for pretty much everything we do.
Just about everything.
Yes.
So, Colleen, tell us some benefits of using credit.
Yes, of course. There are quite a few benefits to using credit. So building positive credit history is very important because we know we need good credit for all of those things we had mentioned before. Also convenience and security. So if you're doing an example I like to use is online shopping,
Sure.
right? It's a lot more secure to be using your credit card than your debit card. Rewards and perks, which are my favorite, right?
Yes.
Are cashback points. So you're getting paid to make the purchases you are making anyways. And then of course your credit score impact. So making sure we have enough activity with using credit to really affect our score to get us up over the 700 range.
Okay, and we all know that Sometimes it's a little bit scary to use credit cards, but if used in the right
Yes.
way, it's a benefit. But tell us some of the risks of using credit.
Absolutely, yes. So there are risks. Debt accumulation is the number one risk with credit cards because it's so easy to utilize the card to swipe and get ourselves in that vicious cycle of credit card debt if we're not able to afford to pay it off each month. And then, of course, if we're not paying it off each month, we're definitely paying interest as well. And we know that interest rate, those interest charges can occur really fast.
Okay, Colleen, next question. What do credit card interest rates look like?
Well, Molly, they can range from 11% to 30%. So it's very important to know this before signing up. But if you're paying off your balance every month, like we encourage you to do, you won't be paying any interest anyways. Make sure you compare variable rate versus fixed rate cards. Most federal credit unions have an 18% rate cap and cannot charge prepayment penalties. Currently, Purdue Federal's rate cap is 17.5%.
And what is the difference between revolving credit and fixed credit?
So with the revolving credit, that is going to be like your credit cards, any types of lines of credit. So it's typically a variable rate and a variable payment, right? So your payment is not the same every month. You continue to use it, and pay it, and use it. Whereas your fixed credit is more of your installment loans. So your auto loan, your mortgage, same payment every month. There's a time frame. It's not something you're reusing over time.
And in addition to possible fees, make sure you compare variable rates versus your fixed rate cards. Rates for credit unions are often capped, like Purdue Federal's at 17.5%.
And just remember that responsible credit use, paying your bills on time, keeping your credit card balances low, avoiding any excess debt is a great tool to enhance your financial well-being.
Purdue Federal offers a student credit card as a great starting point for building credit responsibly. We help your student become familiar with great habits. So remember that responsible credit management involves understanding the risks and making informed decisions. We want to make sure that we're helping to monitor your students' credit reports, paying bills on time, and using credit as a tool rather than a crutch to help your student be successful.